Hey everyone, I just wanted to make a quick video of yesterday's price action on NASDAQ futures because I saw a couple pretty interesting setups that incorporated both order blocks and optimal trade entries. So if we start with a higher time frame analysis, if we look at a 4-hour chart here, we can see that price has spent most of the week drawing towards these buy-side liquidity levels. Yesterday we got a news event at 8:30 a.m. Eastern time that helped us rebalance this 4-hour fair value gap, and then we started heading up shortly after to take out this first target right here. If you zoom out even further, you could kind of make an argument that this whole area right here marks an optimal trade entry for a bullish move once structure was broken to the upside. So we do have a couple of reasons to target these levels. Now, zooming into a 2-minute chart, let's say we just missed this entire leg up that took out the first buy-side liquidity level. It happens. What can we look for? So when we sweep a significant area of liquidity, we can look for reversals that start a change in market structure, in this case to the downside. And so we get just that, a 2-minute break of market structure, and we have a fair value gap on the 5-minute chart right here that's highlighted in this area. So if we take a retracement of this leg down though, we see that the fair value gap is still at a discount, but with a bearish shift in market structure, we want to be shorting this at a premium above this 50% level. So we do have an optimal trade entry opportunity right here, which an optimal trade entry is a retracement between the 62% and 79% retracement levels. And coincidentally, we do have a 2-minute bearish order block right in that area. So I think it's a pretty good area to get short. Even if you were to wait for a confirmation, like a 2-minute reversal or a 5-minute or something like that, just to see that price is in fact rejecting that area. But these are some obvious targets you could look for, obviously, where sell stops are resting right here and an imbalance right here. Of course, it'd be ideal to leave some runners on to see if price wants to reach down any further, but given that our higher time frame analysis is bullish and we're looking for those buy-side liquidity targets, it seems better to exit the majority of a position at these logical targets and then just leave some runners on if you want to see these lows. So this could have been a roughly 5-to-1 trade if you got short at the order block. If you're waiting for some type of confirmation, like a 5-minute reversal, this probably would have still been at least 3-to-1 using the high of the day as your stop. So another factor we want to consider was that the higher time frame bias was bullish, as we discussed, so we might be looking for price to reverse somewhere down here. And again, we see that price is basing in what would be an optimal trade entry using a retracement of the entire morning move right here. And again, we see a bullish order block come into play, the last down close candle before a leg up that creates a fair value gap, or multiple in this case. And, I prefer not to enter blindly at these levels. Like if I saw a price coming down and I saw nothing to the right of where my mouse is, I'm probably not getting long. I would prefer to wait for a lower time frame shift in market structure and ideally a fair value gap that makes the trade higher probability. If you don't wait for price to start changing structure in your preferred direction, then you will often see price just run through your stops because it may very well just keep heading in that same direction if it shows no signs of energetic moves in the opposing direction, which is the whole idea behind fair value gaps. You want to look for where the energy is coming from, where orders are coming in. So we do get this shift in market structure in a 5-minute fair value gap here. Price retraces into it and then takes off. Again, these are some imbalanced targets you could use for the upside. Yes, we would like to target a new high a day with a bullish higher time frame bias, but we have to be aware that we may not get that. So with these targets and this low as our stop loss, this would be a roughly 2.5 to 1 hour trade if you took the majority off at the imbalance. If price did happen to reach the high of the day, it would have been roughly 3.5 to 1 trade. But yeah, that's all I wanted to cover. I thought these setups were pretty textbook and would be great to study. If you want to see more videos like this, just recapping a given day's price action, definitely let me know. But I hope this was helpful, and I'll see you in the next one.